You know, it's really something watching gold right now. XAUUSD just keeps pushing, hitting these record highs.
It really does. Non-stop almost.
And you feel that background tension, don't you? The US-China stuff. Whispers about recession. It makes you really want to understand, okay, what's next? At least, like, for today.
Exactly. That safe haven demand is clearly a big driver.
So that's why we dove into some technicals, specifically looking at it through that smart money concepts lens,
Yeah.
trying to see how the big players might be positioned across different charts.
Right, trying to cut through the noise a bit.
Yeah, exactly. So our mission today really is, for you listening, can we map out the potential path for gold against the dollar just for the next 24 hours? What are the key price zones, the technical signals, and maybe the news that could shake things up?
Absolutely. And applying that SMC framework helps us look for clues about where institutions might be active, which is useful given the strong fundamental interest pushing gold up.
Okay, let's get into it then. Looking at the bigger picture, first, say, the 4-hour chart, maybe the 1 hour. What's the overall vibe there? Still bullish?
Definitely. Looking at those higher time frames, H4, H1, the analysis points pretty clearly towards an ongoing uptrend. It's quite strong.
So higher highs, higher lows, that kind of structure.
Precisely. You see those repeated breaks of structure to the upside, that's the SMC terminology, essentially confirming buyers are still in control on this larger scale. Each new peak reinforces that.
Got it. Big picture, still pointing up. But, you know, I've heard some chatter, maybe seen some signs. Could this climb be running out of steam a little, just in the immediate short term?
That's a good point, and yeah, there are some hints of that. While the H4 trend is strong, when you zoom into the recent action, say M15, M5, even some reads on the H1, it suggests the upward push might be, let's say, less intense than it was. You mentioned signs. One thing analysts look at is the RSI, the Relative Strength Index.
Maybe oscillator.
Yeah. On the H4, it might be starting to ease back from that overbought territory.
Okay, so like it's been stretched pretty far and might need to relax a bit.
Exactly like that. Doesn't necessarily mean a reversal, but it often signals a potential for, a pullback or maybe just moving sideways for a bit, consolidating.
Okay, makes sense. So strong underlying trend, but maybe some short-term tiredness. If we do get that pullback, where might buyers be lurking? Where are those key demand zones according to SMC?
The analysis highlights a primary zone, kind of the first area of interest, between roughly $3,195 and $370.
3195 down to 3570. Okay.
And this isn't just a line drawn on past lows. In SMC terms, this zone likely holds a mix of things, potential order blocks where big buy orders might have been left, and maybe imbalances or fair value gaps, areas price moved through quickly and might revisit. Plus, it sits just below some recent lows, which can sometimes act as a magnet for price before it turns.
Interesting. So that's the first potential floor. What if that doesn't hold? Is there a deeper level, like a stronger support area?
Yeah. Yes, there is. Further down, the analysis points to the $3,100 to $3,180 range. That's seen as a more significant demand zone.
3,100 to 3,080.
Right. If that first 3,195, 3,170 area gives way, this lower zone is where you'd anticipate potentially stronger buying interest to show up. It represents a more substantial area where institutions might have positioned themselves.
Okay, floor is covered.
Yeah.
Now let's flip it. If the bulls do take charge again, maybe after a pullback, where are the next targets? Where's the buy-side liquidity?
Good question. The targets are generally seen above the recent highs. These areas attract price because traders often place stop-loss orders or take profit orders there.
Ah, okay, like magnets.
Sort of, yeah.
Yeah.
They're pools of liquidity. The key levels identified are around $300, $245 initially. Then if that breaks, maybe $3,275, and ultimately that big round number, $3,300, is always a psychological point.
3,245, 3,275, 3,300. Got it. So pulling all this together, the trend, the potential pullback, the targets, what's the most likely scenario playing out today based on this SMC view?
The primary forecast, the sort of highest probability path, involves an initial dip. A pullback towards that first demand zone we talked about, the $3,195, $370 area.
Okay.
There's even a chance it could poke just below $3,200 first. The idea there is maybe to trigger sell stops sitting below that round number, what SMC calls liquidating sell-side stops.
Right. Clearing out the weak hands, so to speak.
You could put it that way. Then, after that potential dip, the key is to watch for signs of buying strength coming back in within that 3,195, 3,170 zone, especially on the lower time frames like M15.
Like a confirmation.
Exactly. If you see that confirmation, maybe a change of character back to bullish on the M5 or M15, then the expectation would be for a move back up targeting those buy-side levels, starting with $3,245.
But what if that zone doesn't hold?
Crucial point. If price slices through $3,170 and doesn't find support, then that primary scenario is off, and we'd have to seriously consider a deeper move towards those lower levels, like 3,135 or even that 3,100, 3,080 zone.
Okay, so that's plan A. Are there, like, alternative possibilities? Maybe a much smaller dip, or perhaps things turn more seriously bearish?
Yes, definitely good to have alternatives in mind. One less likely but possible bullish case is a very shallow pullback. Maybe price finds support higher up, say around $3,200 itself, or maybe $3,213, and then just powers through $3,245 without much hesitation.
Right, just keeps going.
Yeah, and the alternative bearish scenario really gains weight if we see a failure at that primary 3,195, 3,170 support. A clean break below, say, $367 on the hourly chart would be a strong warning sign.
And then you'd look towards 3,135 or 3,100.
Exactly. Those lower support levels then become the logical next targets in that scenario.
So for someone watching this play out in real time today, what specifically on those like super short-term charts, M15, M5, gives the earliest clues? What are the signals?
Those lower time frames are really your early warning system. You want to see continued breaks of structure upwards on the M15 or M5 to confirm the bullish bias is holding during any dip. Conversely, look for a change of character, often called a cart change. That's when price fails to make a new high and then breaks a recent low on that time frame. That's your first potential sign of weakness setting in.
Change. Got it.
And also, when price does reach those higher time frame zones like 3,195, 3,170, you then zoom into the M15 or M5 and look for specific setups within that zone, like fresh order blocks forming or price reacting to fair value gaps. Those can offer more precise timing signals.
Right, refining the entry within the broader zone. Now, we started by mentioning the bigger picture stuff, U.S.-China, recession fears. How much can breaking news on those fronts just blow up these technical plans?
Oh, significantly. That's the constant caveat, isn't it? Gold's strength right now is heavily tied to that safe haven narrative driven by those exact factors.
So a surprise announcement could
Absolutely cause a sharp, sudden move that temporarily ignores these technical levels if there's major news on trade talks or a key economic indicator comes out much worse or better than expected regarding recession fears. I'd expect volatility. Price can jump or fall rapidly based on that sentiment shift. So yes, staying plugged into the news flow today is critical alongside watching the charts. News can override the technicals, especially intraday.
Good reminder. Okay, just to quickly lock these in again for everyone listening, the key SMC-based levels to watch today. Resistance first.
Key resistance zones are roughly $345 to $3,250. Above that, $375 to $3,280. And then the big one, $3,300.
And on the downside, the support levels.
Primary support is that $395 down to maybe $367 zones. Refine it slightly. Below that, $335 down to $320. And the deeper support sits around $3,100 to $3,080. These are areas of potential institutional interest, remember.
Okay, so bringing this all home for today's outlook on XAUUSD, what's the main takeaway, the core strategy?
The overall picture still leans bullish based on the higher time frames, but there's a decent chance of a short-term pullback first. So the approach with perhaps the highest probability attached is to look for buying opportunities, but specifically within those SMC demand zones, especially that first one, $395 or $370.
But only after seeing proof?
Yes, absolutely. Wait for clear signs of buyers stepping in on the lower time frames, that confirmation, those structural shifts back to bullish, before considering any action. Patience is key there.
Right. And one final thought for you, our listener, to chew on today. We've talked technicals, we've talked fundamentals like trade and recession driving gold. As you watch the market, think about this. What specific news headline today do you think could be the catalyst? Which potential event has the power to either validate this pullback then rally idea, or maybe throw a wrench in the works and trigger one of those alternative scenarios? Keep an eye on the news, keep an eye on those price levels, and see how they interact.